All right, Tracy, great to have you here. I'll give you a quick introduction. So Tracy Shuchart is a very successful independent energy trader, and she also recently joined hedge fund telemetry as their energy commodities analyst. And she's also the person behind Chai Girl on Twitter. I've heard it pronounced a million different ways, Tracy.
Chai Girl, yes.
Chai Girl, okay.
Chicago girl, Chai Girl.
Oh, okay. So there's Chinese pronunciations of CHI. There's all sorts of, okay, but it's Chicago Girl.
Chicago Girl, so Chai Girl.
Chai Girl, great. Okay, well, great to have you here. And your expertise is energy, but before we get into energy and directly, I'd like to talk a little bit about currencies. And currencies are very much intertwined with with energy and all the markets. So could you talk about your stance as a dollar bull,
Right.
and how that's played out so far?
Well, as you know, I'm pretty vocal dollar bull. But even though we have seen a decline somewhat in the dollar, and it's been kind of soft, obviously, that doesn't necessarily mean that the dollar is weak against other currencies. So especially if you're talking about particularly once we saw the oil decline, right? -37. You have oil producing nations, that emerging market oil producing nations that have high dollar denominated debt have a dollar shortage problem. So, if you were long the dollar against, say, the Brazilian real or the Argentine peso or the Kenyan shilling, then those have been very good trades this year, as well as the Russian ruble and the Turkish lira, which everybody's fascinated with right now.
So when you say you're a dollar bull, you're not just strictly looking at DXY. You're looking
Correct.
at the dollar compared to very specific currencies.
Right.
Yeah.
Though I just did get long outright dollar futures on Sunday, really because, because I know that there is a dollar shortage in this world, and and basically those funding problems exist on offshore dollars, right, in the euro dollar market, which the Fed doesn't have control of. And so the Fed tried to sort of put a Band-Aid over this issue by issuing swap lines to a bunch of countries, and it did help, but the underlying market is so much larger and out of Fed's control that eventually it was going to catch up. So and things, demographics and debt being deflationary, that I think Mark Yusko just talked about. So combining all of that, and then we just kind of had a beautiful technical setup. We had a rounding bottom with a bull flag. I guess you could call it a cup and handle if you wanted. But so it was just the perfect setup. And so I actually did get long outright USD, whereas earlier this year I've been playing it against other currencies.
Interesting. So the overarching problem, though, for a lot of these emerging markets is that, especially if they're dependent on oil and oil prices drop, they can't pay off their debt, and their debt is in US dollars. So then that pushes the dollar up. So that's the sort of cycle that you're looking at.
Right. Exactly.
So then let's take a look, because you mentioned 5 currencies. Can we take a little closer look at Brazil with the real? Are there specifics? Are you looking at it mostly in the lens of oil, or are there other issues going on in the country that you're?
Well, there's definitely other issues going on in the country, but for me, it was a pure oil play. It was a pure oil play, really. That's all. That was earlier this year in June. That we kind of got that spike, and it's kind of flattened out a little bit since then. But that was just a pure kind of oil play, and same with the peso.
Interesting. And I would imagine for the ruble as well, that would be an oil play too.
Yeah,
for the Russian ruble.
Yeah.
Now,
for the Kenyan shilling, really all of them. Really all of them. And then Turkey obviously, has their own issues, and, it's trading at like 7.6 right now. And I actually think it could go to 10.
Interesting.
Because of other problems that are going on that we can get into later.
Okay, yeah, let's definitely talk about Turkey. But yeah, let's talk about that later. Now, I'd like to focus a little bit on the US and what you see going on in the US, especially in terms of fracking and the shale markets. Where do you see that going? Do you see much more downside? Any upside?
Well, I actually am finally, for the first time in 5 years, I'm actually an oil bull. I know, shocking people. I don't want to shock anyone, but I am actually an oil bull. I do think that, I was speaking about this last year in December with Danielle on Real Vision, and we were highlighting the problems within the industry, where we foresaw a lot more bankruptcies and mergers and acquisitions and things just because of the way that those companies were structured, and they never kind of completely restructured correctly, and they just kept making the same mistakes from the 2014 2016 sort of oil crash. So that I already thought would be all of 2020, and then COVID came along, so that was just a double whammy on the industry in general, and kind of sped everything up. So now we're seeing and it kind of lengthened it kind of lengthened but shortened the timeline, because now we see all these bankruptcies, and we're starting to see a lot more mergers and acquisitions. Maybe those would have taken 6 to 12 months longer without COVID, and now it's kind of having a waterfall effect. Right.
Yeah. Right.
But speaking on the longer term, I mean, looking at, and then I'll start with the near term. So the near term, I think, for the remainder of this year, I think we're basically range bound from where we've been, in that $30 to $40 range. I don't think we're, and I'm on the upper end of that range actually for the rest of the year. Next year, I think we'll inch a little bit higher. And then I'm looking out to, 2022, 2023, where I really think that we could have a big supply problem. We had a demand problem with COVID, right? And oil prices sank. I think we're actually going to have a supply problem, a supply crunch, because all of these companies had to reduce CapEx and things of that nature. And if you look at the shale industry in particular, those wells have very high decline rates, meaning you have to keep drilling constantly. You have to keep more wells in your pipeline, right? So as soon as you cut back on CapEx and you slow down on production, you're cutting your future supply, basically. So and not even just shale, or not the shale industry, but everybody globally has cut CapEx and reduced production. So I do think that looking out, over the next 2 to 5 years, that we could definitely see a spike in oil price.
Do you think it's too early to invest in some of these shale companies, especially because we haven't fully seen the whole fallout? There have been 57 bankruptcies this year. There's been predictions that there's going to be a total of 150. And so would you wait until you see more fallout before actually stepping into this area?
I mean, I think that, the oil, if you look at any of the charts, oil's, it's the most hated in industry right now, and it went from like 20% of the S&P to like 2.5% weighting wise, right? So we're already kind of nibbling at certain companies, but you definitely have to do your due diligence, as far as what you're really willing to invest in. But at 80 to 90% off, there are some really good deals out there if you can, if you can weather a little bit, right? And if it's for it's certainly not a trader's trade right now. It's definitely more of an investment. It would be more an investment trade, like something you're willing to hold on to for, 2, 3, 5 years.
Now, a lot of the shale companies have been getting funding, or were, let's say, several years ago, were getting funding from banks. That dynamic has shifted because banks got a little bit contracted a little bit, didn't want to lend so much, and so it's been venture capital money. Where has the money been coming from for these shale companies?
Yeah, so then you had private equity, right?
Okay.
All the private equity guys got involved, and then they're getting burned. So capital is hard to come by for these companies right now, right? I mean, it is, they're still struggling. I mean, another group is, I'm sure another group will come fill the void, just like when the bank said, no, we don't want any more. We got burned this time, right? And private equity went, well, we have so much money. What do we do? This was 2016. We have so much money. What are we going to do with this? Where do we spend this? I mean, that's all you were hearing in 2016 on how all these guys had so much money. And you're kind of hearing that about VC companies now. So perhaps, venture capitalists will want to get involved.
Yeah. Okay. So you do see somebody stepping up to the plate at some point.
I mean, it's the cycle, right? It's the cycle that goes through. But I'm sure that money will be funded somehow in the industry. And, and Washington is also talking about making laws saying that, banks can't be biased against energy players and things like that. So there is a chance that, the government will step in with some sort of regulation, whether you agree with that or not. It is the industry is big in the United States and provides a lot of jobs and things of that nature, and peripheral jobs around all those cities that are oil producing. So.
Mm-hmm. Well, we do have a question here from Stephanie. She's asking, what would be the best way to play oil, given that it's a commodity? And if you happen to have any thoughts on this, what do you think of Berkshire buying Suncor, if you've been following?
I think Berkshire buying Suncor is great. I'm in Canada right now, so I think that's fantastic. But they're an integrated company, so I think that's I really happen to like that company too. So if Warren likes it, I'm cool with that.
You're on board.
And as far as energy plays, energy is a commodity. I wouldn't suggest most people go out and trade oil futures. So, there are if you want to do something like XLE, that's not just pure oil. It's mostly Exxon and Chevron. And then with some other things mixed in. So, there's a way you can play it like that, or you can, be an individual stock, see individual stocks at companies that you like. If this is your first foray into the energy markets, I would suggest picking like a big integrated company, like, one of the majors that is going to be around.
that won't die in this recession. So we have another question here about biofuel, hydrogen. Do you see any of these as harming oil demand? Is that something that you've been following at all?
Yeah, a little bit. Obviously, ethanol has been around for a while, and Chevron and a couple other are changing over some refineries in California. But I don't see it as a major competition. If that's, I'm not exactly sure the question. I think there's room in the market for it, especially in the California markets where they have very stringent laws and things of that nature. But for right now, I see it probably very localized to certain states that sort of have stricter laws concerning emissions.
Great. And let's take one more question before we move on to geopolitics. So from Cliff, he's asking, what about some of the pipeline companies? Energy Transfer, for example, is that something that you're following, energy pipelines?
Yeah, absolutely. I look at all of them. Energy Transfer's obviously been having a lot of problems. KMI had problems. They sold off their problems. So if you're looking to invest in pipeline companies, again, do your research, because there's a lot of issues going on, especially, along the US-Canadian border.
Mm-hmm. And Let's get into some geopolitics. You mentioned Turkey at the top. So maybe we can talk a little bit about what your view is on, I guess, that Mediterranean corridor and energy specifically.
Right. So basically, I'm definitely watching the Mediterranean corridor because it could really completely change the oil and gas flows within the region, as well as change some fundamental policy there. Mm. So right now, I've heard the EU is mulling sanctions against Turkey over drilling and exploration in Cyprus. Turkey is a NATO member, so that would be a huge shift in policy. However, you do need a unanimous vote for this. So we have Greece, Cyprus, and France right now versus Italy, Malta, and Spain. Now, if Italy swings towards France, then likely Spain and Malta will follow, and they'll get the unanimous vote that they need. Again, a huge policy change. Right now, it's Italy's energy interests in Libya that will determine whether Rome kind of swings towards France or not, because Libya's civil wars kind of has pitted France and Egypt against Turkey, and Italy up until now has sided with Turkey out of just a pure energy interests. But Turkey's getting very aggressive in Libya right now, and its outsized military presence is really turning kind of Italy off right now. So this could swing Italy in favor of France, being that Eni, they're there for Eni, and Eni is the Italian oil company. It's almost like nationalized there. It's supremely important to their country, and so they don't want to be subject to sort of Turkey's dictates within Libya. So really, so why does this all matter, right? Well, for one, sanctions could really exacerbate and heighten tensions in the Mediterranean, potentially leaving the door open for Turkey to be an aggressor closer to home, which would be ungood, right? And two, it completely changes the oil route significantly. Because it makes Egypt a central clearinghouse for European and African gas, which is a major setback for Ankara, because they had hopes of being that regional hub for European gas flows. In fact, as recently as last week, was it? Yeah. There was an gas coalition formed with Turkey, without Turkey, which was Greece, Italy, Egypt, Israel, Cyprus, and Jordan. So right now, Turkey's kind of being shut out of that area. So that, in fact, means that there's no role for Turkey's pipeline that was supposed to be the clearinghouse to go into Europe, which brings the forefront to now Israel's pipeline. Brings Israel's pipeline to the forefront, right?
Interesting. So do you see that putting potentially upward pressure on oil prices if sanctions do go through?
If sanctions do go through, no, I think because this is more of a gas play.
Okay.
But really, basically, this whole background I gave you, I mean, what does it really mean for investors or traders? Basically, this means, there's increasing investment opportunities in Egypt now, rather than Turkey, and in particular in Israel, because Israel, as you know, it's rich in natural gas. They also just had peace accords with several of their Arab nations, which secures their energy place in the region. So right now, a lot of companies are sort of clamoring to get into this Eastern Mediterranean gas market. So some of the companies that we're looking at that would hugely benefit from this would be Zion Oil and Gas, Delek Group, Delek Drilling, Ratio Oil Exploration, Energean, Chevron, and Noble Energy. Now, the big thing we need to pay attention to right now, as far as Noble Energy is concerned, is Chevron is talking about a merger with Noble Energy, specifically because they want their East Med assets. This meeting happens on October 2nd. So this could be a big change and, could be a big boost for their stock prices.
Interesting. Okay, so there are a bunch of factors going on there. One is, whether there's issues in Turkey. Two is, and sanctions specifically. Two is whether there's more deals, peace deals with Israel, and more regional peace. And then the third thing is what's going on with Chevron and actually completing that deal.
Right.
Yeah. Okay.
So that's what we're kind of looking at as far as opportunities in the region.
But for the other companies like Zion Oil and Gas and Delek, what would you say is like, are those just plays specifically based on increasing peace as well as potential sanctions in Turkey?
Exactly. Because their stock prices will definitely get a boost over this now that all these stores are open without sort of people getting in the way of it.
Gotcha. Yeah, right. And actually, there was an announcement today that so Israel inked a few deals, peace deals. So one with the UAE and one with Bahrain. And now there's news that in the coming days they might ink another peace deal as well. So it's sort of, I guess, a continuing story.
Exactly. And so we just think there's a lot of opportunity in that region right now for investments. And those, again, are just some of the companies that, I think that will definitely gain from everything that's happening there right now.
And before we go on to the next geopolitical area, we do have some questions coming in that I want to get to. So this is from Omar. He says, whatever happened to the hype about peak oil? It seems to have gone away lately. Do you think peak oil is now nearer or farther away? Yeah, I feel like that was a 2008.
It was like a long time ago. We had peak oil, then we had peak demand. And so really, I think it's, those buzzwords tend to come and go, but I don't think it's still, there's no peak oil.
Peak oil. And it's not, well, I feel like shale specifically disrupted that. And so.
Yeah, absolutely. And, it's going to take them a while to, get back up. We may never get back up to exactly the levels that we were in 2019, which again, only reinforces, kind of the bullish, less supply.
Now, we have another question from Dan who says, given the U.S. political climate, issues in the Middle East, pipeline and competition in Europe, Turkish ambitions, how much is risk skewing the fundamentals?
As far as, are you asking if are they making prices higher? Or
I would imagine, so yeah, let's go with that. Like, do you see that potentially pushing prices higher?
I don't think, not necessarily. I think there's always geopolitical risk with oil, right? It's just a factor of the nature of the commodity. But I think what's happening in the Middle East, really, I think you have, I think it's actually, more positive, not only in the way that I think that things are getting better, right? And instead of getting worse. Like, I don't think that Turkey doesn't really produce enough of oil or gas to make any difference. So even if everybody had sanctions against them, they're not a player in the market. So I think the good things that are happening sort of outweigh any kind of risk of Turkey being, sanctioned out of the market.
Gotcha. Now we do have a few questions about China coming in. What happens to the economy and I guess also oil markets in the case of like any sort of battle or issues between China and the US? And then I guess looping in another question is how much attention should be paid between China and India, especially in terms of oil trading, as well as like any sort of military exercise activities and issues there?
Well, I don't think that's, I know there's a lot of hype in the media. I don't foresee any actual physical confrontation between the United States and China at any time soon. I just, militarily wise, I just don't see that happen. You might see, you see them buzz each other, in the South China Sea, and you hear of these things, but I personally don't think that it will escalate to anything higher than that as far as the United States and China is, clashing is concerned. China and India is definitely some area that you definitely want to watch. In the case of something happening in, say, the United States had to pick sides, the United States already has alliances with India and already has a lot of oil deals with India. And so India, the U.S. wouldn't lose any business that way. As far as China is concerned, they're just starting to buy a lot more, but really they're not the U.S. main customer. Saudi Arabia and Russia are really their big suppliers. So we're kind of a secondary market to them. So it wouldn't really affect the United States so much.
Now, we do have another interesting one a question coming in about China. Do you have any thoughts or perspective on China's yuan denominated oil contracts and what that actually might do to USD pricing of Middle Eastern oil?
I think it'll do absolutely nothing.
Really?
Yes, absolutely nothing. I know I've had arguments. Lots of arguments. But I absolutely think it means nothing. The volume isn't that big. They actually don't deliver. It's not, they don't deliver that much. It's a deliverable contract, but they don't really deliver that much. And it really hasn't really affected the market, so to speak. Because it's not their oil either, right? It's Middle East oil that they store, that they resell. China is not even a big producer. I mean, they've produced 3.4 million barrels a day. That's nothing. So,
right. So you don't suddenly see everything getting priced in yuan in the future. You don't see that taking over the dollar.
Even if it did, the thing is that these companies, like say BP, for example, just made a delivery there. Well, BP was paid in dollars. Because they don't accept yuan for payment. So they're paid in dollars. They dump it off, and China sells it in yuan. And so perhaps you purchase it in yuan, then you go right around and turn it back into dollars because nobody wants yuan.
Yet. All right, we have a few more questions. One is, or actually we have a few about the election, and then I want to move on to some of our other geopolitical spots. So do you see Biden winning as bullish or bearish for WTI, or does it even matter who wins?
I think that, I think that if you look at Biden's track record, he's really actually the most pro-oil Democrat of all, right? He was he was in office when the first Arctic drilling permits were sent. He's backed every bill for the oil industry. So he's actually really pro energy. So, but should we have a foreign policy change if there is a new party in office? Many of the companies have already, what they were talking about is they would not allow new permits on federal lands because really they can't do anything about states. Can do whatever they want. They can do something about federal lands. That's fine. But ahead of the election, pretty much every company has come right out and said, we're already buying, we're already grabbing up every lease we can on federal lands just in case this happens. So I don't think that it would really change the dynamic as much as people think, right?
Interesting. And so do you see anything happening to the dollar during the election as well?
I think leading up to the election, the dollar will bounce, but it is, as far as after the election, I think that really depends.
Mm-hmm. If there are disputed results, that could.
Right. There could be there's so many things to speculate. So
Well, let's move on to some of the one geopolitical area we haven't really touched on, which is Africa. Could you talk a little bit about what you see going on in terms of oil, gas, utility demand, et cetera, going on in Africa?
Yeah, so we'll start with oil. So basically, Angola has been kind of the darling there, right, for the last couple of years, because there was new deposits found and things like that. That's kind of we could talk about that, but there's not really that much to talk about. But what I do want to talk about is Mambia, because it's kind of a thing in the industry that not a lot of people are talking about right now. There hasn't been any discoveries yet, but there looks like there could be a potential of quite a lot of oil to be found. So right now, there's kind of a race to be the first to, discover oil there. So companies there that I'm watching are Reconnaissance Energy, Eco Atlantic, Tullow, and EOG. So those are companies you kind of want to keep an eye on. Again, people aren't really talking about it right now. So I could see opportunity there.
How long does this process usually take? I mean, could this be in the scale of like many decades, years? Are we talking weeks?
I think it'll be sooner than that. I mean, I think, it does vary, but, it's kind of, they started this year. So, basically, 1 to 2 years, maybe less.
Possibly. Okay. So we're not talking 2030.
No. I'm talking about things that I'm trying to talk about things that are relevant and what I think are investable now.
Okay. Good to know. And then of course, there's the whole renewable aspect of European countries also investing in areas of Africa. Could you talk about that?
Yeah, absolutely. So I mean, I'm a big pro-Africa person, but I know that there's a lot of problems trying to invest in the company. There's a lot of corruption. There's a lack of regulation. A lot of people have gotten burned in investments there. So the alternative is you can invest in European utility companies that have invested there. And why are European utility companies investing there? Well, they have a big green push right now, so they started with a big green push, investing in, solar, wind, and minerals and metals to make those products. And then especially after COVID, it's become even more important because Europe basically got all of their rare earth metals from China, right? And now they're looking to diversify, even further. I've talked about supply chains changing and things like that. So there's going to be a big push, an even bigger push, I should say, for some of these utility companies to invest in Africa. So instead of directly investing in Africa, you can, in fact, invest in some of these utility companies.
Interesting.
And I'll give you some companies that
Sure.
I think are interesting. So we have Siemens Energy, which is very interesting because they are debuting on the German bourse next week. Then there's Droge Energy. There's Neon, which is in France. There's Contour Global and Blue Energy in the UK. There's Skatel in Norway. There's Enel in Italy, and AMDA in Energy in Spain.
Interesting. And so all of these companies are somehow investing in different regions of Africa?
Yes, and they're all listed. I mean, they're all listed on an exchange too.
Interesting. Well, let's turn back to some questions that we've been getting in. I do have a fun one here for you, which is, do you have any recommendations on futures, on books about futures or the energy market? Oh, excuse me. Yeah, and they're wondering if you will write a book too. So do you have any book recommendations and will you write a book?
I don't know. Maybe one day I'll write a book. There's so many oil books you can, can look at. Oil 101 is always my favorite first book to, kind of give out to traders, because it gives you such a broad, it's by Morgan Downey. It gives you such a broad aspect of sort of the oil industry, and really how it's physically traded, and the difference between the crude grades, like really kind of, gives you a really nice solid background on that. So, and then there's other books like The Prize.
I've read that one. It's a big one.
Yeah, it's huge. Yeah, it's huge. And if you don't want to read it, I think they made a special on PBS or something.
They did. It's fantastic. I highly recommend that.
I didn't see that one. All right. So you can catch that there. Jürgen just actually came out with a new book. I forget the title, but it's also supposed to be really good.
Interesting. And then we have a few other questions. Are you following the uranium markets at all, especially China and India planning on new plants?
Yeah, that's not my market.
That's not your market. Okay, so we will.
Sorry, guys.
We will move on from there. What's your view on the end of the year and during the elections on technicals in metals? Have you been following metals much?
Yeah, absolutely. I mean, as far as metals are concerned, I trade a lot of platinum, and some silver. Some gold, but mostly platinum. I think the market's going to be very volatile, because I actually think all the markets are going to be very volatile, except for oil that just is not moving. But, as far as, because it's, metals are tied to rates, and also the markets, if the markets sell off and your portfolio is upside down, what do? The first thing you sell is your metals, right? So I think as, with all the uncertainty coming in the election, and who knows what happens after the election, but I think that the election is not going to be over when the election is over, if you know what I mean. So I think the markets in general are going to have a lot of volatility. As always, I think it's good to have some gold in your portfolio just to sit on. But I think it'll be volatile enough for traders to, traders like volatile markets. So
you mentioned before that you're, I guess, long-term dollar bull. Does that necessarily mean that you would be somewhat gold bearish, or that doesn't pair up for you?
That doesn't pair up for me. I mean, to me, gold is really tied to real rates, and not to, we have seen dollar and gold go up together. We saw that earlier this year and last year. So that the dollar is not a factor for me. It's really more about rates.
Gotcha. Now we have a question from Mike, who asks about the impact of a COVID vaccine on oil and the dollar. Do you have any thoughts on that?
I'm not, let me say I'm not an actual long-term dollar bull. I think eventually, it will come down. I'm just a medium term dollar bill. But if we have a COVID vaccine, I'm sure, as far as everything, I think that will calm all the markets in general. Obviously, for oil, that would be very bullish, because, then we see people flying again, people taking the subways again, definitely going to work again, and, things would be opening up again. So that would be very bullish, in my opinion, oil, and for a lot of markets.
Yeah. Now, a few more geopolitical questions. I'm curious as to your take on Iran, and their levels of oil. So we have a question asking about new data on oil exports released by Iran, which has increased significantly. And what do you see as the end game for the cat and mouse, war, quote unquote, between the U.S. and Iran?
Well, I think that, we all know Iran's still selling oil, right? Because there's always a way around sanctions. There's always a gray market and a black market. So, they have been selling, I don't know, give or take 1 million barrels a day somewhere in the world, mostly to China through Malaysia. They're selling finished gasoline to Venezuela right now. They do have a lot of stock piled up, right? And so we are noticing that some of their offshore floating storage is diminishing. So we do know they're selling it, and there's really no way to stop that. But it really hasn't made really an impact on the market it's very negligible as far as that's concerned. And as far as the future is concerned, my hope is that we come to some sort of
agreement. Yeah.
Agreement that doesn't involve bombs.
Right.
Hopefully diplomatically, we can work this out. And so, we're kind of seeing a little bit of Iran kind of being more willing to talk and things of that nature. So, it's not going to be solved tomorrow, but
you're hopeful.
Right.
Now, what about Libya? Do you have any thoughts in terms of what's going on in Libya, as well as oil prices there?
Well, we kind of talked about that a little bit. I know, Libya lifted the oil blockade, which is fine, but we also need to watch that with a little bit of caution, because this has happened on and off for the last 8 months. And, there is a question that they've been offline for 8 months. You can't just snap your fingers and bring it online that fast. They also have stockpiles that they need to go through. So, it's an area that oil traders are watching, because they were producing like 1.1 million barrels a day before this occurred. And then they were down to about 100,000 barrels per day. Now they're, up to like 250K. So traders are watching the market, and, OPEC will adjust accordingly if Libya comes online. But again, it's not going to happen tomorrow. So, if they totally restore oil, within 6 to 8 months, who knows where we'll be in 6 to 8 months, right? Demand could be a totally different issue by then.
Now that we're hopping around the world, I want to keep hopping around the world. I'm curious we have a question here about what traders and investors should think about the politics of Ukraine and that region.
I mean, what's that specific? I mean, specific question. I mean, there's been kind of ongoing problems. There's been ongoing problems in Ukraine and that area for a very long time. So, I mean, I think as far as the market is concerned, sort of that geopolitical risks as far as the gas is concerned and travel through that country, that's kind of been factored in already.
Gotcha. Well, now I want to hop back to Canada. This is before we bring in Dale and Steve to see if they have any questions for you. But one final question here is, why did you move to Canada and not stay in Chicago? And wouldn't you change your Twitter handle to Canada Girl or something else?
No, well, I can't change my Twitter handle. It's me.
Okay.
And I came here for a job opportunity. So, and then just ended up staying. I really love Montreal. And so, so here I am. And I love Chicago too, dearly. But, right now it's not a place that I want to be.
Well, you should get the Twitter handle at Canada Girl just in case too. Who knows? Like maybe you'll have two accounts. Well, anyway,
you still have the Tracy still has the Chicago accent, though.
I know, right?
Even though she's gone to Canada. Really nice to see you, Tracy. And wow, I'm telling you, this was a great interview. It's the best I've ever heard you. Really outstanding job, and Justine, what a great host! What a great host and anchor, and the questions you asked really, helped make the interviews. It was a pleasure meeting you. And Tracy, great job, and I don't blame you. I don't want to be in Chicago either. In fact, let me ask you this: would you want to be anywhere in the U.S. with what's going on?
No, actually, I'm okay here, hanging out here, watching right now.
Fix up that guest room, Tracy.
Plenty of room. Plenty of room.
All right. Anyway, so I want to thank you guys for adding class to this Traders Summit, both of you, and I hope everyone that was here enjoyed it. It was our mission to bring some ideas. Tracy, so many different oil stocks. I've got to get the the list from you, and your bullish oil. I fell off my chair.
I know, right?
And yeah, and you know, it makes me in my intelligence gathering. It made me wonder why crude didn't break with the market this week, and
See,
it's
that's
acting
another
really.
reason. That's
Yeah.
another reason.
Okay.
Actually, Dale, she's super bullish because if you consider that she's not bearish the dollar, being
Right.
bullish crude
Exactly.
Yeah.
is
Yeah.
is a very strong signal, right?
Yeah.
Well, look,
So
oil hasn't moved. The market tanked, right?
yeah.
And the dollar's rising, and oil has not moved.
Have you ever seen a dormant period like this before, Tracy, for this long?
It's the magical invisible OPEC hand.
Okay. Yeah, it's definitely. I can't remember. They say never sell a sleeping market, and crude is in a coma. So
Yeah.
Tracy,
interesting.
I don't know if that came up today because at some point I was in a call, so I might have been unlucky and missed it. Did you comment on the explosive price action on natural gas during the past 3 days?
No, I didn't really talk about
We
natural.
had many people today in the webinar. You know, I was showing this amazing price action. First, everybody that was trying to get long again at the orderly pullback was stopped out during the past few days. And then we had this, I don't remember seeing such a price
Boom.
action many times in the past. I mean, we went in
Oh, it's
literally
crazy.
like 48 hours from $1.8 to $2.9.
It's crazy market. It's not really my forte. I don't really trade, nat gas futures, but certainly not gone unnoticed.
The widow maker, they call it, right?
Exactly.
Yeah.
I
So
don't have
there,
the
you know,
stomach for that market.
me
Yeah,
either.
it definitely is
Yeah,
a hard
and
one.
Steve doesn't anymore either. So that's gonna be a wrap for our.
Hey,
It's
wait,
gonna be
hold
a
on.
wrap.
I just want to say something. Thank you, Tracy, for being here,
Yeah,
being
go
part
ahead.
of the Traders Summit. And Justine, it's wonderful to hear your voice. And I've seen a couple of interviews you've done, and you ladies brought a lot of class to this ragtag team of other guys that we have here. So
Thank you.
Thank you.
Thank you.
And we'll see everyone for day 2. Quite a lineup for tomorrow as well, everybody. So Blake and I will be up before the Roosters so that we're here at 4:45. That's 7:45 Eastern to start day 2. Everyone enjoy their evening. Remember, don't just count your pips, count your blessings. And we'll see everyone for the Traders Summit day 2 tomorrow morning.
Check the site. The schedule is up. It's going to be amazing.
Just like today. Thank you, everyone.
Somebody just wrote "drinks up, mice down." That
Yep,
reminds me.
that's Tracy's line. That's Tracy's line.
Nice.
Thank
Cheers,
you,
everybody.
everyone.
Thank you.
Thank you, Tracy. Thank you, Justine. Thank you, everybody, for being here.
Good job, Steve. Nice job, team. See you guys later.
Thank you, Dale.
Bye-bye. Have a great rest of the day.
Cheers. Thanks, guys.